Christina.
Hello.
Nice to see you.
Nice to see you. Thanks for coming down.
Thanks for coming down as well.
Yeah.
So for everyone who doesn't know Christina, Christina is the founder and CEO of Vanta. Vanta is the leading trust management platform. For any companies in the audience who ever have a deal in your pipeline that might get stuck in security review, if you want it to close this quarter, I would recommend you buy Vanta. As a shorthand for what Vanta does, it helps companies get secure, be compliant, manage their risks, and show off their security. Vanta's raised over $200 million,
Oh, yeah, that's true.
350 employees,
Yeah.
5,000 customers. But for folks who haven't heard the Vanta story or how the company works, want to share a little bit about Vanta?
Yeah, so like Andrew said, leading trust management platform. And what that means basically is there's two broad things we help a company with. One, get kind of baseline secure and start to build out a security program. And then second is sort of demonstrate that security to build trust. So that might look like a compliance certification like SOC 2 or HIPAA or GDPR. It might look like, fast automated answers to those really annoying vendor questionnaires, those like spreadsheet of questions, right? And sort of the thinking with Vanta is, we can, again, help a company get secure, which is a good thing for customers and for the world, I'd argue, and then help businesses grow because they're secure, because you're able to build trust with your own customers.
And prior to starting Vanta, you were a PM at Dropbox, which is a company known for having lots of customers, but not necessarily being a security company. Can you talk about how you found founder market fit with Vanta?
Yeah, so at Dropbox, I was working on Dropbox Paper, which is sort of their document editor, sort of their version of Google Docs. And it was a brand new product when I was working on it. It was basically they'd acquired a startup that had the tech, and then we were trying to bring that tech and product to all of Dropbox's thousands, millions of customers. And I was sort of the PM that was trying to take this new thing to market and did not know the first thing about security review or compliance. I was just, again, the PM who was happily about to launch and giving the product away to all these Dropbox enterprise customers to get feedback and good logos. And then literally the legal team walked up to me one day, a very nice guy named Robin, who was like, "What are you doing?" We have contracts with these big companies, and the contracts say Dropbox is SOC 2 compliant and pen tested and vulnerability monitored, and Paper is none of these things. So you are violating these contracts, please stop. And those are my introduction into all of the work and effort it takes to go through a SOC 2 process or a pen test, but then also the huge benefit on the other side, right? For us, it was really one of the only ways to take Paper to market.
Excellent. And when Sequoia invested in Vanta, it was January 2021. The markets were high. We did the deal over a scenic hike in the South Bay. And you were one of the few companies to raise a growth round into the teeth of the bear market. So this is about how to make your startup recession resilient. And you were one of the first founders to, I think, face the proverbial music in terms of fundraising. You raised $150 million during the market downturn in 2022. Can you talk a little bit about the differences between January 2021 and late summer 2022?
2022, yeah. It was brutal. And that was with the business that was doing well. So we raised in the Series A in January of 21. Decided not to raise in late 21 when things were even more bananas, because as much as it would be nice to walk around and be like, Vanta is this, $5 billion company and we're awesome, I couldn't say that with a straight face, and particularly I couldn't say that to folks who were trying to recruit and be like, oh, here's this equity that will be worth more than this in the near future. So didn't raise in 21, did raise in this bear market of 22, which was kind of brutal, and it was just so different, right? Because you'd have these meetings with investors, and we actually got the deal done by the first investor we talked to, but they sort of put us through the ringer. And it was just like, oh, you have a good business, and oh, you've doubled, tripled since last year, and great, and but we're going to go line by line through all of your metrics and just drill you. And well, we know you have this ARR, but what if all your customers go out of business in this recession? And so do you really have that ARR? I'm not sure we're going to give you credit for it. Anyway, so it's just a totally different experience of rigor and like objection handling, and really forcing us to be crisp on, where there was risk in the customer base of customers going out of business, where there wasn't, why we were sort of a painkiller, not a vitamin sort of product that wouldn't get turned off as companies cut their spend. But yeah, very different.
Yeah, I agree. And I think interestingly, since then, I think security has proven to be far more recession resilient, or in terms of just new customer behavior and retention and all those things, than a lot of investors at the time would have thought, especially, like for our metrics too.
Yeah.
So can you talk a little bit about why you think security has thus far proven to be so?
Yeah, I think it is very much kind of the painkiller, not a vitamin. And again, this was the pitch last summer, but it actually has proven out to be true. In that, if you are a B2B company building a product today, trying to grow your business, probably by taking on customers that are larger than you are, showing off that you're trustworthy and will be a good steward of their data is sort of mission critical. Right, like maybe in 2012 or 2015, you could sort of hand wave it away and be like, look, but we have better technology than the incumbents. Like, well, we're good at security. We, went to fancy schools. Like, don't worry. And in 2022, 2023, it's like, none of that hand waving cuts it. It's like, here's our security practices. Here's how you can, it's not just me saying it. Here's proof that I follow them. And that is just so necessary to get these B2B deals done now.
I think one thing you mentioned was how you can proactively show off your security to your existing customers and potential new customers. Recently, Vanta announced its first acquisition of a business called TrustPage. Can you talk a little bit about what that company does and how it fits into the broader Vanta strategy?
Yeah, we're really excited about this. This was about a couple months ago, already integrated. We actually have a new product announcement tomorrow coming up, so keep an eye out for that. But TrustPage really vision aligned with Vanta, which is basically how do we turn all this good security work a team is doing into, again, a trust building exercise and like an accelerant for their sales and their business growth. So they have a set of tools around kind of showing off and demonstrating your security posture in a real-time way, a bunch of tools around questionnaire automation, and taking both structured and unstructured data and sort of showing it off, again, so your team can get business credit for all the work it's doing, and also spend less time in the mundane copy paste work of security reviews and compliance audits as well.
Yeah, I think a lot of folks would be happy to automate as much of the security review process as possible.
Yeah.
And I think the topic here, how to make your startup recession resilient. Now, I think there's a lot, if founders spend any time on Twitter, you'll see various blog posts from various months about burn multiples and efficiency ratios. And I think one of the things that you believe is more of a focus on leverage than on efficiency. So can you explain that general framework to the audience and maybe how you might apply that framework if you're building a startup, maybe 0 to 1?
Yeah, so this actually came from our CFO as well, so he gets credit. I can't take that credit, but the sort of idea is efficiency often intentionally or not ends up meaning cheap, and it ends up meaning cost cutting, right? And if you're trying to grow a business, that it's not always the most helpful thing for growth. And so we've thought about it as, look, we are still trying to grow. We will spend money in order to grow, but we want to do it in leveraged ways. And so it is not, everyone gets whatever budget they want because we don't have budget, or, we're going to, spend $1 to make 50 cents sort of thing. But, and we had this conversation at the board level too, it's like, well, look, if you can spend $1 to make $2 or $5, spend that incremental dollar. And so what that might look like is we might burn more. The burn ratio hopefully is actually better or not getting worse, and there is more revenue growth in the business. And so again, maybe it's kind of the leverage versus efficiency. It's thinking about not just the cost side, but the cost and the revenue side, right? And this is where I think actually burn multiple is a pretty good metric, because it really is looking at, for every dollar you spend, how much ARR do you bring in, right? And so in that world, if you can spend more dollars to bring in more ARR, it probably is good. I mean, you tell me, you're looking at the business financials, but that's very much the model we tried to take into this year, started at the end of last year at Vanta. And so for, folks in the audience, I think it is, when you're trying to evaluate either new spend or, hey, we've been spending on, SEO and, trying to figure out if it's working, right? Again, not just looking at the cost side, how many dollars are you spending on whatever program, but for every dollar you're spending, what are you bringing in, and trying to kind of maximize that.
Yeah, I'll share a few thoughts as somebody who sits on the other side of the proverbial table, I guess the literal table sometimes too. I think lots of people question, what is the impact of higher interest rates going to be on the startup economy and all these things. And one thing I've said is, I've never met a founder who said, I started my company because interest rates are at 0%, right? Like, I think founders start companies to solve problems that they feel. And similarly, investors don't invest in companies because the burn multiple is 3.4, right? Like, it is just an irrational way to view the mindset of an investor who are trying to find the next fundamental company of tomorrow, wherever they can find it. And for that, it's about finding founders who are solving real problems in markets that matter with differentiated products, et cetera, et cetera, et cetera. Now, the burn multiple is a really good way to kind of shorthand product market fit at some level, where you are, you're just assessing, how much does the market really want to pull this product out of the company's hands versus how much are you having to push, but it's almost useless in a vacuum. And I think one of the things that I would encourage any founder in the audience who's going out to raise a seed or a Series A is, I would not lead with the burn multiple or lead with efficiency per se. I would lead with the story of the company and the market and why it matters and your unique insight. And if you have really good efficiency metrics, it's an amazing way to say, and if you don't believe us on these things, look at this. And if the number is good, the market's telling you that it wants your product, and you can kind of go from there. But I would just, I would be careful about people assuming efficiency for efficiency's sake gets you anything, because it kind of doesn't, especially in startups where you have to grow 10, 100 times to really move the needle. Anyway.
You've been very kind of adamant about that in conversations. It's like, well, I'm glad you have a plan to only burn whatever, small percentage of the money over the bank this year, but can you burn more and get more revenue growth? Because remember, you're in the game of doubling, tripling year over year.
Yeah, I think it's probably interesting, maybe to wind back the clock to Vanta's early days. This is interesting. Just when we invested in Vanta, when I first met Christina, I remember one of the things that was most unique was that the company had gone 2 to 10 million of ARR, cash flow positive or thereabouts, and it was very clearly a kind of efficiency, leverage-oriented story. And I think one of the things that I think a lot of founders who are kind of at mid-stage startups say are trying to wrestle with is how to, drive this culture of frugality and leverage and doing more with less into the roots of their company, especially if the company was started in 2020, 2021, where things were a little bit easier. We talk about, how you might make a company's culture recession resilient.
Yeah, I think so. That part of Vanta, and on a lot of, it was a period where people thought we were bootstrapping the company, because on some level we were, right? We got to $10 million before the Series A, and that was off of a $3 million seed round, basically. But it wasn't bootstrapping in a particularly philosophical or ideological sense. It was just, this actually seems like a proper business. How much can we grow it and grow it ourselves? And I think that had a couple good benefits for the company. One was it just forced us to kind of, well, one, be clear-eyed about the business in front of us, right? What was it? How much were we making? How much were we spending, right? I literally got the cash balance emailed to me every Monday, kind of knew it down to the $10 increment. I don't anymore, and I kind of miss that, even though it's totally irrelevant on many levels. But it was just things like that were helpful. It forced the, hey, we think we are building a good business, and that's because we're in it and we know it, versus we think we're building a good business because a VC invested in us and likes us. And that is, important too, but I think actually that internal sense is really important, especially when things are hard, right? Because then it's like, oh, well, does the VC still like us? Or like, oh, they like us less than they used to. Does that mean we're like doing really badly? And you're just kind of at the whims of the world, right? You're like, it's very like the world is, controlling us. We are not controlling the world. Whereas when you don't have a lot of that, right, it kind of forces you again to grapple with the reality of what's going on, the good and the less good. And then, you have a lot of agency for the things that are not going well in the business, which are always such things. What are you doing about them? Or which ones are you ignoring for now, knowing you're ignoring them and it's kind of burning and it's painful. But I think just that like inner perspective and in some ways confidence or agency is really important. Because even in a like tumultuous economic time, recession, Twitter saying all the startups are going to go extinct, whatever, bank failures, it really forces like you and your company and the folks that work at your company to like have their own perspective on things. Again, not be like people to whom stuff in the world happens.
And one, at a very practical level, you guys had and it's not a hack, but you had a very good business practice involving working capital early in your life.
Right, only vaguely knew what working capital meant.
Yeah, so I want to talk about just maybe that as a piece of very practical advice
Yeah.
for founders in the audience.
Yeah, it's like the best cheat code to startups I have, truly, actually. Beyond all the tropes of like hire good people and whatever, it just isn't super helpful, is like charge your customers annually upfront, like actually. And that is because in our case, we were selling like 5-figure contracts and we would get the money on day one. And so part of how we were able to scale from $2 to $10 million is basically what would happen is we'd sell a bunch of, customers of Vanta, we'd get the money that month. We would immediately turn around and pay Vanta employees with that money. And our bank balance would just stay the same, right? And we'd hire more people, but the sales would grow. And like roughly what it was like the new contracts would pay folks and the bank balance would just sit there. And it felt like magic, basically. And you can explain working capital much better than I can, but as far as I can tell, it is kind of magic, but it's legal magic.
Yeah, no, I think it's interesting. This is, I think, one of my personal, I don't know if pet peeve is the right word, but something that bothers me is when you'll meet founders who are building SaaS companies in the Bay Area, and it feels like they are playing build a SaaS company, not build a company. And there's this notion that even with burn multiple, right, all ARR is created equal, annual recurring revenue. But ARR billed annually up front versus ARR monthly in arrears, right, those are very different businesses. And one, you can use customer funds to help grow the business, and one, you're kind of always waiting for the next check a month later. And I think, if you grew up in Ohio, say, and you were focused on building a business, not building, a startup SaaS company in the Bay Area.
Become a startup.
Yeah, you would very much care about these things, cash flow, not ARR just for the sake of having a burn multiple. And I think that is something I would also encourage everyone is like, just don't forget you're building a business, and businesses rely on cash flow, especially in markets like this. And if you can find ways to do good cash collections and good cash management, obviously, that is a way to earn yourself for basically free an extra 5 months of runway, and an extra 5 months of runway in a market like this can matter a ton.
Yeah.
So, anyway, we said if we had extra time, we have about 5 more minutes, we would do turn the mic over and have Christina ask me questions, which is, we've probably done staged things like this a dozen times, and we've never actually gotten to extra time. So I'm very curious to hear what questions you'd have for me.
Yeah, well, maybe starting off, you asked me, 2021 funding, 2022, what's it like for you? I mean, people talk about how it's less frantic and you can take more time, but what is, someone is pitching you today, what does that experience look like for them?
I think practically speaking, it's very similar in that, we are in the investment business. We're not in the not investment business. That's something that Don Valentine, who's Sequoia's founder, who passed away a few years ago, Don said that to me on my first day at Sequoia. He said, never forget we are in the investment business. And, we wake up every day, and obviously, like, the first thing we do is check our email and figure out, all the fires that Christina has sent me that we need to help put out and all the rest.
Not long.
The second thing we do is we think about, what companies out there might be the next game-changing breakthrough fundamental company of tomorrow. And I think similarly, we aren't less excited about that when the markets are down than when the markets are up. In fact, we're more excited to go find new companies. But I think one of the things that's different, I think a lot's talked about multiples and valuation in this market. The other thing that's true is that just good metrics and revenue growth is proving harder to come by in 2023 than it was in 2021. And you mentioned the vitamin versus painkiller. A good product in a good market just isn't good enough. And I think the thing that we are most focused on is the company that has 80th percentile metrics across all of the metrics that might possibly matter is probably an 80th percentile startup. And everyone's seen the data. An 80th percentile startup is not worth very much. So we look for outlier businesses. If you have a 100th percentile metric or a 100th percentile raving customer base, and maybe there are some things going the wrong direction, we are way more excited about that than the 80th percentile down the quote-unquote middle of the fairway company.
Are there metrics that you all particularly care about, that you think founders should focus on? The burn multiple isn't really one of them for you all.
I think one thing that we have always focused on at Sequoia is market size, market tailwinds, and then also just qualitative references, talking to customers, talking to partners, talking to the team. And I think it's one of the things we do different is that we don't farm out hundreds of references to people who then send us a report. Before we did the Vanta investment, we talked to 20 companies directly, 20 founders directly, not just on the product, but also on you. And there's this level of, I think, qualitative diligence that we put a lot of weight in. Obviously, as companies scale up, the rubber meets the road at some point, and the numbers have to show up. But I think it's the combination of that plus market opportunity, plus just doing the work. And I think if you have a product that really meets a customer need and they're willing to pay for it, we're ready to go.
Are there particular sectors or industries you're looking at? I mean, maybe I'll throw AI in here just because it's so hot right now.
Yeah, no, I think, look, I have this, I will speak freely in front of this audience. I'm one of the few people in our industry who will admit I fell in love with finance first. I love investing, and technology second, because I believe that technology companies have proven to be the best way to build enduring businesses of the future. So I've always, when I look at the Vanta demo, I thought it was an amazing demo because I could see how this could become an enormous company. When I see the AI demos, I just think they're amazing, right? This is the first time I can remember, probably since I was in high school, where I've been so fundamentally excited about a new technology platform. And also, it's never made me appreciate the Gartner hype cycle, wow, maybe those guys really did have something right there. The peak of inflated expectations followed by the trough of disillusionment. Someday we will reach that plateau of productivity. But right now what I'm seeing is just an amazing number of new products being launched. I think every company that has a co-founder CTO, where that person maybe doesn't have direct reports, co-founder CTOs are 100% focused on integrating AI into people's products. And I think what's going to come out the other side is a litany of hugely cool new experiences, and some of them are going to turn into very valuable businesses. But for the time being, I'm just excited to watch it all come out.
Yeah. We just had a hackathon at Vanta, and a lot of the projects were AI based and really neat.
No, totally.
It was super cool. So you mentioned you fell in love with finance first, which I've heard you say before, but building off of that, you're probably the person I know who most just deeply believes in and respects this SaaS business model and the size of software markets. You have a poetic way of talking about it. If you could share that with us.
Sure. No, sure thing. I like all sorts of businesses, but I will, high gross margin, recurring revenue, write the product once, sell it 1 million times. That is the best business model that we humans have come up with thus far. Now, there are challenges to it too, right? We're seeing it now. Every sector has got lots of competition. Barriers to entry because of things like AWS and things like Stripe are dropping, right? It's easier than ever to start a company and get going, but I think the benefits of scale really matter, and if you can win your market in a big software category, it is, I think, kind of the most straightforward way to building an enduring business that will last for a very, very long time. Because despite what the media might say, there is no analog transformation happening in this day and age, right? The digital transformation of 2021, 2022 is continuing in 2023. And I think the more people ignore the noise, focus on solving customers' problems, and keeping the long term in mind that the business world will run on software for the foreseeable future, and with the wave of AI, probably more so than ever, I think it's the perfect time to be starting and building a company. So anyway, with that, I'll just do one quick plug. Vanta, as I mentioned at the start of the talk, Vanta has enormous value prop for any of you who want to get more deals done faster. There's a big booth back there. Christina's going to be there. Lots of Vanta folks are going around. And look forward to seeing you there. Thank you, Christina.
Thanks so much. Thank y'all.